home time and time and time again, and I'm going to keep drilling it home time and time again. Preparation is the key. Preparation is the thing that creates opportunities, and unfortunately, when the markets are in fear, that's where the best opportunities are visible. So I told you this. Look at this, guys. 5 days ago, you can't get more of a clear warning than this. Bitcoin alert, is the market cool off starting? 5 days ago, warning, render prices could plunge by 40%. 19 views, 36 views. No one gives a shit about bearish news, guys. Unfortunately, this is how you're going to be successful in the crypto market. You need to pay attention when the market's in times of fear. Are the markets in time of fear? What is Bitcoin doing? How is Bitcoin dominance behaving? And what altcoin opportunities are we going to get on the back of this? That's what this show is going to be about. Stay tuned right to the end, subscribe to the channel, and you'll get 5-day warnings just like this. Okay, first thing we're going to talk about is how greedy are the markets, how fearful are the markets. We look at the fear and greed index, and this is an important tool that you can look at. You can look at this every day to find out at what stage of the market we're in from a psychological perspective. Remember, guys, they're not just candlesticks that randomly go up. It's buying and selling, buy orders and sell orders. The bulls are buyers, the bears are sellers. So just remember that it's a psychology. When people are feeling crap, when people are feeling fearful, you start getting those nasty red candles on the charts. Those nasty red candles aren't random. That is people being fearful in the market. So why is the fear and greed index important? We're on 26 now out of 100. We're in fear. We're nearing extreme fear. And the markets rhyme, they never repeat. And historically, fear is the best opportunity to buy within the crypto market, within any market, and extreme greed is the best time to sell. So we've seen last month we were in extreme greed. What happened? Market needed to cool off, market needed to reset. That's exactly what happened. Market needed to reset, and the market did reset. You see this by the crypto bubbles. We've got lots of negative coins there today. You've got Notcoin 27.7%. You've got Gala down 19.4%. You've got Lido down minus 21%. And this is the weekly bubbles. When you look at the daily, we've had a bit of a bounce. Is this bounce the bottom for the crypto market? We need to look at the Bitcoin chart. We need to look at the dominance and identify exactly what levels the alts are on, should I say, on the weekly higher time frame. So let's dive into the charts. And where do we start when we chart the minefield that is crypto? Of course, we start with the big daddy Bitcoin. Why do we start with Bitcoin? Because it's our leading indicator. Why is it our leading indicator? Because it's more than half of the whole of the crypto market cap combined. So all of the other cryptos, add them all together, and it's still not going to be as high as the Bitcoin market cap. That's why it's our leading indicator. That's why we need to look at Bitcoin for direction. So this is the higher time frame. This is the weekly time frame. Each one of these candlesticks represents one full week of price action. So this candle is going to close on Sunday. Once that candle closes on Sunday, we need to identify what levels have held. Because you can see that we've nearly kissed the 618 retracement. We're not there yet. And I'm half expecting Bitcoin to come down and at least test this. That's sat at $52,000. So that's the 618, and you can see that coincides with this build of a price action. We've got 1, 2, 3 weeks there, 1 candle, 2 candle, 3 candles. That should build up a price action. We want this to hold as support. So we've got our 618 here, sat at 52,000. We've got this build up a price action, which is going to give us some kind of a base. We're hoping that this base is going to hold. And if we fall through there, you've got this bigger price action sat down here, which coincides with the 786 retracement. That's our last ditch attempt, because once you've broken and closed below the 786, that's showing that the retracement's got a lot deeper than what we'd like. That's showing that the bears have remained in control during the pullback. They've managed to pull it back past the 618, past the 786, and then you're expecting some form of reversal. Why is that important? Because once you've broke the 786 and you've taken out this previous low, that confirms a reversal is in. Does it mean it's happening? Does it mean it's going to happen? No, it doesn't. Am I planning for that? Yes. Am I expecting it to happen? Not necessarily, guys. So I'm preparing myself. I want to see how price action hits at this 618. I want to see if 52,000 holds, and that's going to give me additional confluence that I can look elsewhere in the market for higher risk. Next thing that we're going to look at is the dominance. I just want to show you this, guys. So this is the weekly. This is the weekly. Look how long we've been in this ascending channel. We've been in there for over 2 years. There's signs that we're breaking to the downside. Is that good? Bitcoin dominance breaking to the downside. That's exactly what we want. We want the altcoins to outperform Bitcoin. And once this happens, that's going to show that that is exactly what is happening. So the alts are going to outperform Bitcoin. Once we actually confirm that this level once we confirm that this level has been rejected, it's currently been rejected, once there's confirmation that it's been rejected, and we put a lower low, lower close candlestick like this, which closes below the low of the previous low, that's going to give us a high probability that the altcoins are going to start outperforming Bitcoin. So that's the Bitcoin dominance. We know exactly what we need to happen. We know what we need to happen on Bitcoin. We need to hold the 52,000. Now we can go into higher risk and see and identify what's looking like a good move in the altcoins. We'll start with JASM. We've seen the JASM pullback. It's pulled back. It's holding currently previous resistance, which is now flipped support, and we need this to hold as support on JASM. My buy order on JASM was set at 24 cents. So I had a buy order set at 24 cents, but it wasn't my full position. It was 25% of my position. And I'm waiting to see if we pull back even further, because if we do, that's going to bring my average down by adding another 25% down here. If we break and close below this low here, that's signaling, the same as Bitcoin, that's signaling some form of short-term reversal. That's not what we want to happen, guys. So that's JASM. I am dipping my toe in the water on JASM. You can see that it's run against the rest of the crypto market. It looks like it's going to be one of the runners for the 2024-2025 bull run. So I'm interested in JASM. Next thing is AVAX. I really like the look of AVAX. You can see we've been waiting for this to happen. Let me pull this up. We've been waiting for this to happen. Pull back to this level here, $20. We said we were expecting a $20 AVAX. We just got a $20 AVAX. Now we need a bounce, a break of trend, and then we can start making our merry move to the upside. But the AVAX chart looks pretty nice there. You can see strong support. We had a build of a price action. You expect this to hold as support because it held as support for such a long time here. Let's measure it. Before we had the break, that was 518 days in this range. So a 518-day range. Once that's broken, you expect that to hold as strong support. So I'm expecting AVAX to hold the $20. Anyone that's got AVAX at $20 can't be a bad thing in my opinion. Next thing is Arbitrum. Look at that. That's been absolutely battered. Would I dip my toe into Arbitrum? Let me just check this. Right, okay, the candle started at 50 cents. This is going to be the first area that I'd be interested in Arbitrum, 50 cents. This is going to be the first area. So I'm not interested in Arbitrum now. I'll be dipping my toe in the water. And then I'm going to wait for the break. 25% here, guys. Remember, ladder your positions in. If you're wrong, you can bring your average down. 25% here, 49 cents. Wait for the break. Confirmation that's going to hold as support, and then you can start building on your position. Remember, none of this is financial advice. It's just how I would play this, guys. I'm just trying to take you on a journey to help you understand what these things on the chart mean. They're not random. I keep telling you that they're not random. It's human emotions. It's buyers and sellers. Is there more buyers at any point in time? Is there more sellers at any point in time? What's the leverage like? All of these factors play into what exactly is going to happen with price action. So helium, look at this, guys. This looks perfect. Nice little bump and run here. You've got this build up of price action here. You've got a bump, which is putting a new high. This is coming back, and this is holding as support. This area here is holding as support. Remember this build up of price action. What's that going to do? That's going to hold as support once it's broken as resistance. So that's exactly what's happening. That looks pretty good to me. Let me just zoom in and see if there's any kind of divergence to look at. So this is the daily chart. Bring up the RSI. You can see, look, there's an indication that we're getting some kind of a shorter term reversal. That indication is this bullish divergence. Lower low, lower high, lower low. What's happening on the RSI? You've got lower low, a lower high, and then you come back down and you put a higher low in. This is the important thing, this higher low. That's indicating to us, this higher low is indicating to us that the buying and selling pressure represented by the relative strength index is showing that the buyers are outweighing the sellers. They've put in a higher low and the price chart's not matching that. So the price chart needs to catch up. That's an indication that helium is looking pretty good. Okay, next thing is FTX, should I say? FTM, I beg your pardon. Definitely not FTX, guys. Right, okay, so this is the daily. Go back out onto the weekly. What can we see from the weekly? We've just broken a strong level of support. So the way that I'd be playing this on Phantom, it's cheap at the moment, guys. It's cheap. If you're looking at an investment perspective, it's not a bad idea to dip your toe in the water at these levels here. You've got a support sitting between 30 cents and 39 cents. But the way that I'd be playing this is I'll be waiting for the break. We could do something like this. We could come down even further. We could test this as support, and that'd be the ideal area to wait for the break. So wait for the break on Phantom for me. And the last one is Casper. I'm not interested in Casper. The reason why I'm not interested in this at the moment is its run. If we get some kind of a reversal in the crypto market and Bitcoin gets an even bigger slam to the downside, then what's going to happen here? One thing that we've got, we just showed you bullish divergences. What's this? This is the opposite, guys. Flip it in reverse, bearish divergence. We've seen this on the top of Bitcoin. We've seen that Bitcoin was due a pullback when we were in extreme greed because we had this. We had the bearish divergence on there. The extreme greed was telling us that the markets are getting overheated. Markets are getting greedy. Look what's happening here. Put in a higher high, a higher high, a higher high. Put in a higher high, a lower high, and a lower high. So you put in 3 lower highs here, 3 higher highs here. That's telling us that helium needs to cool off. So it's just about looking for clues in the market, guys. We're looking to see how far Bitcoin's pulling back. We want it to hold 52,000. That's going to give us indications that it's going to be nice to be risk on elsewhere. If you did enjoy this video, don't forget to subscribe to the channel, guys. I want to teach you everything that I know within the markets, and I'll see you in the next one.